Hello and welcome to another podcast with Kelly Humpheryes and myself, Mayor Planty, for Here to Help with Finance. So, a number of you have listened to the podcasts over the last few weeks and have come up with some different suggestions. Obviously, previously we've been speaking about the commercial, the portfolio landlords, HMOs, etc. But a number of you have mentioned residential mortgages, people's own mortgages, or people with a buy-to-let mortgage that's coming up to an end of a fixed rate. So why search far and wide for experts when I can bring in my own homegrown expert? And I'm delighted to bring in Kelly Humpheryes, who's worked with me for a zillion years in Windom Finance. But I think rather than me do any of the talking, we can let Kelly introduce herself. So, hi, Kelly. Thank you for joining me on this podcast.
Thanks for having me, Mayor.
So just give the audience a bit of an understanding of your background.
Okay, so I've worked in the mortgage industry since 2004. I've always worked alongside Mayor in this industry. I started off as a mortgage advisor when I was quite a lot younger. And throughout the years, as our business has developed, so as my career path, and I now taken over our management of our sales and new business, and that's on a residential and buy-to-let basis.
You covered quite a in our history some time ago. You had when we were massive in back in the day, you covered a big team, if I recall correctly.
Absolutely. I think in our heyday, I think we had approximately 200 staff and colleagues that we worked alongside.
And that was a time where obviously regulations were developing, and the FSA, then obviously the FCA, and all those changes were adapting. And I think the beauty of the business was we could adapt accordingly. And I think when we saw a number of, the 2008 crash, and, we've seen the cycles go on, and that's why, you are well fair to deal with the current customers that we have. A regulated environment where somebody is dealing with their own property or a consumer buy-to-let. Well, you can define that. A consumer buy-to-let is what?
Okay, so a consumer buy-to-let is normally an accidental landlord. For example, it's normally a person that owns a buy-to-let property where they or a family member have resided in the property. There are some variations on that. So some lenders will not class a property as a consumer buy-to-let if it is a professional landlord with more than 4 properties. So therefore, that would fall back into the non-regulated side of industry.
Right. It's more of the regulated environment we're talking about today. So the residential and the
So a consumer buy-to-let landlord would normally have a portfolio of less than 3 or 4 properties or a single property where they themselves or a family member have resided in the property, and that falls under the scope of full advice.
Okay, so why I wanted to bring you in because one of the teams that you manage is the product transfer or rate switches team, and this podcast is based on a number of inquiries that people are struggling. Their fixed rates are coming up to an end, and they're struggling what to do because of circumstances have changed. So first of all, let's just explain to the audience what a rate switch or product transfer is. Is there a difference?
Technically, no, it's just different terminology. Customers, I think, refer more and understand the concept of a rate switch. So that's switching your current mortgage rate to a new product once you're coming to the end of that fixed rate or track tie-in period. Product transfer is more of an industry terminology.
Okay, and so what? So the client is staying with the same lender?
Yeah, so I think that the thing with a lot of clients is that they get scared when they're coming towards the end of their fixed rate or tie-in period if their circumstances have changed. So that could be down to employment, income, credit score, etc. And obviously lenders will write to the customers to tell them that their product's coming to an end and to reassess their options. So basically what we would do is reach out to those customers and let them know what their options are to remain with their existing lender rather than refinancing to a new product with a new bank.
Okay, so if we go through it, you mentioned a couple of the points above, but so if we take in the scenarios where a person is fixed in with the likes of Halifax, right? So, but their circumstances have changed in the last year or two, whatever it is. Unfortunately, they've recently lost their job and they've become now self-employed. Now, in my knowledge, a recently self-employed individual in the last, let's say, is now self-employed for the last 3-4 months. It doesn't really matter how successful they are; they will struggle getting a mortgage because they've got no track record, SA 302s, tax returns, or something. As a self-employed person, would that impede a rate switch?
No. So basically, as you're already existing customer with your current lender, the lenders won't actually do employment checks, income checks. There's no income verification required. So basically, if your financial circumstances have changed since you originally took your product with your lender, that should not affect your ability to do a rate switch.
So, okay. And what happens if they've had a county court judgment or a default? They've missed some payments in credit cards. That's a showstopper for many, many situations to place with a lender.
Absolutely. Okay, so again, most lenders don't credit score for a rate switch. Again, you're an existing customer, so based on the information you provided at your initial application is the reason you got your mortgage with that lender. The main criteria is that your mortgage account is not in arrears. Other than that, defaults, county court judgments may not affect will not or should not affect your ability to do a rate switch or product transfer. The only question that may come up occasionally is regarding bankruptcy.
Okay, so let's just go into that arrears side of things. So if an individual, right, has missed, let's just think of the most potentially toxic for new applications for new lenders. They missed a payment within the last 3 months, 2 months ago, okay, right? And they've made the payment up. It'll still register as a missed payment with any lender. But you're saying rate switches, what's that situation? As
long as the account is brought up to arrears. Historically, lenders have said, or some lenders have said, okay, if you've been arrears and you bring them up to date, we'd like to see 3 months. But actually, most of that criteria is now gone. So as long as the account is up to date and there's no missed payments showing on your or arrears showing on your account with the lender, they'd be happy to do the rate switch.
Okay, and we had a strategic meeting with one of the lenders who has told us that there is a vast number of clients who have now gone on to this standard variable rate, the SVRs, and not doing anything about it because of fear that they can't get a new mortgage because of their changed circumstances.
This is the pity about the situation is actually these customers are the ones that would benefit most from a rate switch by refixing or taking a new product with their existing lenders, but fear of criteria and lack of knowledge of the way that product transfers work with their lenders is what's holding them back. So by us reaching out to customers and educating customers, it's treating customers fairly and enabling them to actually reduce their monthly outgoings and be on a more beneficial rate, especially with rates changing so much recently.
Okay, so we've got a mixed bag of people who listen to us. First of all, explain standard variable rate. So just give me a quick...
Okay, so the standard variable rate is the rate that you normally switch to with a lender after your current deal comes to an end. So you might be on an existing rate of, say, let's say 2% at the moment, coming to an end at the end of this month. Next month, if you do not refix it or remortgage to another lender, you'll slip onto the variable rate. At the moment, the variable rates are varying between sort of 7% and 8.5% with most lenders based on the Bank of England. And normally a variable rate will track what the Bank of England base rate does.
And obviously, at a very high level, what are people fixing at the moment for whatever, 2, 3?
Well, some of the best fixed rates at the moment are coming in around the 3.9%, anything up to 5%, depending on whether that's a buy-to-let or a residential product.
That's a huge saving.
Absolutely. Hundreds of pounds a month that could be saved
Wow. Okay, that's fine. So people out there listening and are thinking, okay, great. I'm on my fixed rate. It's coming to an end. When should I do it? Because I've got, another 5 months left and I don't know what to do.
This is a brilliant question, Mayor. Most lenders actually have extended the term that they can do a product transfer or secure a new rate for. It used to be mainly 3 months, but now most lenders are allowing this to happen up to 6 months before your current deal comes to an end. The great thing about coming to, say, us as a broker is the fact that actually we can monitor your fixed rate so that if rates did drop between now and the period where your new rate would start, for example, if we did a fixed rate now to start on the 1st of July, we would get the new rate to start on the 1st of July because obviously rates at the moment are higher than what you're currently on. But we would also monitor your case and records on the 1st of every month or every month to make sure that if rates did drop, we could cancel and rekey. But obviously if rates did continue to rise over the next few months, you know that you've secured into a deal and will not feel the impact of that.
Okay.
So 3 to 6 months is normally the spectrum across the whole of market.
Fine, but if they're less than 3 months, then obviously they can just do it whenever they like.
Absolutely, yeah.
Okay, and so rate switches, Windom Finance charges.
Mm-hmm. This is the joy of my job, actually, and it's one of the questions that most clients ask me after we've gone through everything. And then when we say we do not charge a broker fee, they're like, "What?" But yeah, we don't charge a broker fee for any of our rate switch services. It's free of charge.
Okay, so I'd like to know. Listen, I know the answers to this one, but I think we are so. It's easy for me to say I'm taking the credit for all your hard work, but it's, we get huge amounts of feedback from the clients. And I think the biggest testament obviously is repeat business, which our company thankfully benefit from, but also the independent reviews, which is unbelievable to see because I get to see, FIFO is the independently accredited site that people say whatever they want to say about us. And I think we're running over 600 5-star reviews, I think it is.
Yeah, closer to 700, Mayor. So this is a testament to our customer service levels and also the satisfaction of our customers that have used our services. Particularly with rate switches, the comments that we get is that it's quick, it's effective, and it does what we say it does on the tin, basically.
Perfect. I mean, as we come to an end, I think we've touched about the residential. Is there rate switches available for buy-to-lets?
Yes, there is. And again, most of the rate switches with the buy-to-let lenders are more formidable than the variable rates that are on offer. In fact, in most cases, they're not offering rates in the region of 8% as they would do on the variable rate. But yes, it's not exclusive to residential customers, but available to buy-to-let customers as well.
That's amazing. Okay. And finally, a bit of a tricky question because it's a very generic one, but when should if my fixed product was coming to an end, when would I consider remortgage as opposed to a rate switch?
Well, I would always start checking your rate switch options 6 months prior to your current deal coming to an end, and monitor the market that way. As brokers, obviously, we can compare the whole of market. With regard to mortgages, I would always leave it. I would start an application at least 3 to 4 months before your fixed rate comes to an end to make sure that you don't slip onto that high rate variable. Right.
Okay. Fantastic. You have been a star as always. Thank you very much for your time. As I've always said, any information given should not constitute advice. Please get in touch with us. info@windom.co.uk would go straight to a group email and Kelly and her team will be more than happy to help. Call us anytime. Thank you very much for your time, Kelly. Appreciate it. And hopefully everyone found it informative. Any suggestions, any comments, please let us know and we will incorporate it into the coming podcasts. Thank you very much. Take care, Kelly. Much appreciated.
My pleasure. Thank you for having me.